The Independent Fiscal Office prepared a report about 5-6 months ago that indicated if the property taxes were eliminated, home values in Pennsylvania would increase by approximately 10%. Now, obviously, other things would be changing in terms of the PIT. Would you agree with that assessment that property values would increase without the school property tax?
The property values?
The values of the property would increase. So in other words, let me give an example. If you're going to buy a home and you're going for financing, the bank, in looking at your affordability index, will deduct from that any homeowner association fees or any property taxes before determining what your mortgage would qualify for. And then as a result, it has a downward pressure automatically on the value of what you could possibly afford. So it reduces the demand curve for the home. So the Independent Fiscal Office's perspective was that home values were negatively affected on an average by about 10% because of the way the Commonwealth taxes. So my question for you would be, if school property taxes would be eliminated, would you see or expect to see an increase in home values?
Yes, I think so. Using the example Mr. Kelly used, with these taxes being $24,000 a year, several months ago my wife was leafing through Malta List and saw a house, and a rather large house, and she said, "Boy, this sounds cheap. Why don't we go look at it?" And I said, "How much are the real estate taxes?" And she said, $22,000 or $23,000 a year. I said, "If you gave me that house for nothing, with the condition I had to stay there and pay the taxes, I wouldn't take it."
Absolutely.
Yeah.
The second question I have for you is, yes, sir.
Representative Ryan, could I
Please
just
put
add
me-
to that,
yes, sir.
please? The solid answer would be without a doubt.
Thank you.
There was a study done for PAR regarding House Bill 76, and that, of course, it's a different bill. It would have eliminated all taxes. In Monroe County, the number that they said was a 28% increase overnight. But these houses that we use as examples, the one for $24,000 in taxes, the school taxes on that, I believe, were $18,000 and change of that. And that home, if it would be me marketing it, with $6,000 to $8,000 in total property taxes as compared to its sister properties in, say, Sparta, New Jersey or somewhere, that home would be on the market for $500,000 or $550,000, and it probably would be under contract in a matter of weeks, not months.
The second question I have, and then I'd like to make a comment, and I applaud the makers of the bill for this initiative. With the homes, as an example, in Luzerne County, there's 2,500 homes going for share of sale in the next 2 weeks. Monroe County, it's a fairly big number. You and I have never met before, but I'm an expert in keeping companies and individuals out of bankruptcy. I helped orchestrate the work with Northeastern Bank and First Eastern Bank that collapsed because of the Wayne Newton bankruptcy that got absorbed by other banking institutions. I've been a CFO of a publicly traded bank. So, and I'm brand new at doing this, so I have very limited experience as a legislator. So I make this comment in this context. When you have a share of sale, does that adversely affect the comparable values of property for appraisals of property in the area that you're dealing with that could put downward pressure on the ability of someone to sell a home in your county?
Yes, I mean, you go through a community, and if half the block has homes either sold at sheriff's sale or tax sale or up for sheriff's sale or tax sale, that's obviously going to affect the value of the rest of the neighborhood.
Okay.
Without a doubt.
We have a bill, and I would mention, in light of this bill being done, I saw it and I thought it was a great initiative. I've implemented House Bill 2548, which precludes a municipality or school district from selling a home at less than 80% of the fair market value on a sheriff's sale. And it's going through the Urban Affairs Committee right now. I'd encourage you to take a look at it. My last comment I want to mention to you. I ran for office for one reason only, and it's to eliminate property taxes. I do bankruptcy for a living. I'm an expert in economic warfare from the Marine Corps, and I can assure you, if we don't get rid of this onerous tax, it will destroy the cities and the counties that we deal with across the board. We're seeing a mass exodus of citizens from rural areas in Pennsylvania to outside the state. We're losing working families because of our tax code. We need to do this. I've got a different bill, a version the House Bill 76 that I've worked with PASBO and other areas on that I would like to show you. But we need to do this as an interim, and we have to stop screwing around. We have to get it done. One of the worst things I can tell you that's going to happen, if there's a life event for a senior citizen in this community, in this county, and in this state, in which they lose a spouse and the income drops from Social Security, you have just also put that person out of their house. It's immoral, it's unconscionable, and I will not, as a Marine, allow that kind of conduct to continue. And I thank you for doing this bill. In terms of the IDEA Act, it requires contributions from the federal government, subject to formula up to about 40%. In the Commonwealth, that number has never been reached. What's the average that you're aware of that school districts are being reimbursed?
I'll have to check into that, Representative. I don't have it on the top of my head. I remember it was far short of what was promised.
Yeah, in my districts are where it's 13%, so I don't know what it is statewide. If I would ask you the question, are all the dollars that are mandated to be spent on special education as effective for the child as the educational institution might believe would be necessary? Do you have a concern that some dollars sometime are legally mandated as opposed to being in the best interest of the child? I know that's a tough question to answer.
Yeah, that's a tough one. I mean, the federal law is in the best interest of the child. So, I mean, school districts with their IEPs.
I'll be
it's all
glad
an
to answer
individual
that
one.
question, Frank. One of the issues is sometimes there's a difference between what the school district believes is in the best interest of the child and what the parent may think or an advocate may think.
Right, that's why I'm bringing it up.
And sometimes it goes to court, and then the court ends up forcing the school district to pay for things that they may not believe was, in the best interest of the child, but the court decided it was.
Like Chairman O'Neill, I have a special interest for children with disabilities. I walked across the United States for it, and I met with Senator Toomey's staff yesterday about crafting legislation to provide relief to the school districts to get up to the 40%. The question then came up about the efficacy of it. In terms of the pensions, in terms of the liability, I wanted to ask Representative Dunbar at some point, but we didn't get a chance to meet yet with the breaks. I was surprised on the comprehensive annual financial report, the CAFR, that the state PSERS, the liability for the pensions for school districts is not on the state's financials. And when I checked it with the state's auditors and with the Auditor General staff, and he said it's because it's not a liability of the state, it's strictly a liability of the school districts. I have not yet, my guru is Representative Dunbar, Jeremy Keel. So I haven't independently checked that, but when I checked with bankruptcy courts, what they told me, and this is still an up in the air question, so I'm asking you if you have greater clarity, is that the liability is 100% to school districts, and that if there was a bankruptcy of a school district or an Act 47, the funding differential would have to be made up by the property tax. Do you know if that's accurate or not?
I only know the beginning of your question, which was a bit ago under the accounting standards. That liability, the full liability, became on our books.
Okay.
That was controversial a bit because your liability tripled, quadrupled on your tax filings. But at the same time, I think a lot of the actuaries and a lot of our banks that we work with kind of realized that it wasn't a quote-unquote real number. They kind of looked at it and said, well, that's the entire liability. What's your proportion of that liability? So there was that adjustment. Now, I can't say bankruptcy-wise for a school district because thankfully we haven't been in that situation.
Okay.
So I don't know the answer to that.
The one last question and a real quick comment. On GASB 75 required or mandated on June 30th, 2018, that the post-employment benefits for things such as health care be booked. Have you had any school districts yet get a magnitude of that impact on the financials, and that will that alter your budgeting and your needs for cash flow going forward as well?
For the healthcare line,
Yes.
your insurance line item.
That's
in
correct.
essence. I mean, you predict that every year you work with your insurance company, but I mean, overall, the increases have been less than what we were predicting, actually.
When you have to book that liability, though, have you seen a major increase in the amount that you have to book, or have you not had anybody that's been audited yet to have that impact yet?
I don't know that, but we can look into that.
Okay. And then the last comment is a comment. The school district's concerns for predictability are very valid and very real. But I will also say this as a business owner and a homeowner, the predictability of expenses for the homeowner equally is real. When our income varies and we have nothing but fixed expenses associated with it, the only thing that's going to break is us. I think this bill's a good step in the right direction, and that's my last comment. Mr. Chairman, thank you.